Yeah, global capital formation truly is the big unlock. Quick announcement, don't forget to sign up for the official closing party tonight at ETHDenver. Free entry with your ETHDenver ticket. Register on Luma. Next up, we have Ebb and Flow, Mastering the Tides of Crypto Liquidity with Raajeev, Reddy, Wenny Kai from Sin Futures, and Shuki Ma from Plume.
Hi, hello everyone. This is Shuki from Plume, and I'm the Chief Strategy Officer at Plume Network. And Plume Network is the RW5 focus layer 1, and we're going to launch our mainnet next month. So stay tuned for more campaigns, and if you want to build on Plume, let me know. So today I'm with Wenny, Tai, and Raajeev, Reddy. Do you want to introduce yourself before you start the panel?
Sure. Before I start, I really appreciate that there's still such a big crowd in this room today. I was not expecting. I expect like max 10 people. So I'm Wenny. I'm a partner at Sin Futures, and Sin Futures is a decentralized exchange. We are live on Base. We are actually right now running about 60 and 70% of the derivative volume on a daily basis on Base. And we have been in the place since 2021. And before I joined Sin Futures, I was mainly working at CeFi platform called Matrix Board, where I was leading the RWA and wealth management business. Yeah.
Hi, I'm Raajeev, Reddy. I've spent the last few years building engineering teams at Coinbase around liquidity management, bridging, optimizations, custodial Bitcoin and Ethereum wallets, and I'm super excited to be here today.
So today we're going to talk about liquidity, both on-chain and off-chain. So before we actually jump into the discussion, do you want to introduce what does liquidity mean on DeFi side and on the CeFi side?
Sure, I can start first. So at Sin Futures, we adopt a rather we call innovative approach of when approaching liquidity. We have an order book. You can basically making or taking the market, or you can passively market making the market through our AMM. So liquidity for us has always been driving the retail users coming to Sin Futures and trade on the alternative assets that they couldn't really trade on central exchange like Coinbase. And on top of that, we're going to launch our own vault product, which means you can essentially passively deposit your assets into a market-making vault, and that is going to launch in the next few months. Yeah.
Cool. Talking about liquidity in general, it's a measure of cryptocurrency. If it's deep, then you can buy and sell immediately. For centralized exchanges, how is this different? Think of this as you are trying to swim in a pool where there's a shallow water. It's very hard because you're trying to displace the water every time you're trying to swim. So the price of the asset would change along with the transactions. And the similar way, for the think of you swimming in an ocean, then it's very easy to swim, or probably if you know swimming, and you have a deep liquidity, so it means that you are not displacing the water a lot, and the price is going to be a lot more stable.
So for liquidity, it's both very important for centralized exchange and decentralized exchange. But how does it mean? How does it impact trading volume and market efficiencies? In both of your companies.
I can start. So liquidity on DeFi has always been a hot topic because there's simply too many DeFi protocols out there and too thin of liquidity on chain. Let's just admit that. And because we run a permissionless on-chain protocol, that means we can list any meme coins, any altcoins in 30 seconds. But where does the liquidity come from? And if the liquidity is not there, the trading experience is never going to be compatible or even performant compared to a central exchange. That's something we have been, iterating over the last 3 years with building the product. But for now, of course, thin liquidity will, first, of course, it means higher price impact. And secondly, we observe that for projects we're working with, let's say we list their perp market, XYZ coin, and if they have a very thin liquidity on the spot side, it's very, very easy. It's very easily manipulated on the price side, which means essentially the bad actors can push the price on the perp side, and then they can, take the profit from the spot side, or vice versa. So we now are, and that as in futures, we don't do cross margin, which means every single market is isolated, and that's really helpful for our risk management. Otherwise, we wouldn't be able to support such a wide range of assets. But yeah, I think for us, the most important thing, because we're on Base, so that's why we are super bullish about, Base, the recent announcement on the block time upgrade, 10x fold. So for us, on the order book side, if we can, introduce an efficient market making program where, users can leverage our SDK and do the automated trading, but it requires very low block time, for that to happen efficiently and to make it profitable. So it's going to be a long time of work, but for now we are improving our mechanism, but at the same time, we're very hopeful that when Base launch, we'll be adapt down to the speed. Yeah.
Yeah, usually people want to custody assets at the centralized exchanges, and when something like a market event activity happens, they want to flock onto centralized exchanges like Coinbase and then trying to withdraw those funds, either Ethereum or Solana, or trying to convert that into, or the DeFi, trying to buy tokens. The crunch issue is that when the customers try to get their funds, all of them want to come at the same time. So you're looking at a huge movement of funds from a cold wallet to a hot wallet, and then eventually moving towards the individual customers' wallets. The gas prices are usually very fluctuated during that point of time because you're trying to move huge amount of funds over multiple different customers, and sometimes the transaction gets stuck, and sometimes the transaction go through. There is scalability challenges that usually the centralized exchanges have to deal with, along with the fluctuation with the gas prices.
So how does basically your company prove the liquidity to your users, and what kind of infras and tools that you're using for the proof of liquidity? And also, how do you think that we can avoid something like the liquidity hack of Bybit in the future?
Yeah, I think I can just take this quickly because DeFi is really easy, right? Because everything is on chain. Of course, we have our mechanism where we maintain like our community maintain a due analytics and all kinds of data dashboard that they can track our on-chain data flow or like trading volume in real time. And DeFi Llama is something that's all of the protocols are referring to on a daily basis. So I think they do a really good job on tracking all the data. On the security side, DeFi itself, we run permissionless protocol. We audit everything independently with an independent auditor, and we do run a bug bounty program as well from very early stage. So we always welcome any community members bring up some potential loopholes that we have overlooked. I guess for us it's really like a non-custodial way of managing the assets. So I think I would just let Raj talk more on that on the centralized exchange side.
Yeah, for centralized exchanges, it's a little bit more nuanced. You have two different concepts here. One of them is the proof of reserves, and other is the proof of liabilities. The proof of reserves kind of tells you that what's the value of assets, and what are the different kind of assets that the companies like Coinbase or any other centralized exchanges would hold or custodied. And then there's a proof of liabilities, which kind of tells you what's the value of the funds that they owe to their customers. Ideally speaking, proof of reserves and proof of liabilities have to be equal. But in the real world, we know that there could be hacks, and there could be a lot of different things that happen. So the proof of reserves always have to be much larger than the proof of liabilities. And you're talking about the hack, which happened with the Bybit. There was a 1.5 billion that was hit in the terms of proof of reserves. So they were able to cover it really, really well because they have the corporate funds. So having an additional proof of reserves is really important, along with the proof of liabilities. And I think one of the advantages of Coinbase is it's a public company, so they declared both the proof of reserves along with the proof of liabilities. I've seen Binance and Kraken and other central exchanges actually showing the proof of reserves on their websites and everything, which is very, very transparent too. But overall, both the proof of reserves and liabilities play a big thing to say how much does a exchange own in terms of liquidity.
Yeah, so for regulations part, because Plume is building the RWFI chain, and we pay a lot of attention to regulations all over the world, especially in the United States and also emerging markets like LATAM, and also some very important APAC countries like Singapore. And I was actually in Consensus last week, so we heard a lot of comments from the policy issuers from the Hong Kong governments too. So I actually wonder, have you heard of any interesting current regulations or the future policies that will help with the regulations on the liquidity on both CeFi and DeFi side? Do you want to start? Yeah.
Hello. Yeah, I can pick on this first. So I was fortunate to work with a few regulators because when I was at the CeFi company, including regulators in Singapore especially, because back then, 2021, a lot of companies are applying for the PSA, the payment license, and also the CMS, Capital Market Service license. And actually, we were one of the first company that got the CMS license with a mandate that we can run a crypto fund. That was insanely, back then it was insanely advanced. I would say to this day, I'm still very, very impressed how the MAS in Singapore, communicate with the participants. Back then, it was really the feedback loop was so quick. On a daily basis, we'll have meeting and they will listen to what we want to do in terms of the crypto fund and the fundraising, who are our target users and things like that. But then, of course, the FTX happened, and a lot of things got taken back. And recently, we've been, after that, I was working with, SFC because Hong Kong, they were pushing this virtual asset service licensing, and a lot of companies got, I wouldn't say burned out, but they didn't really have a clear business model if they have to 100% comply with the regular requirements, because that means you can only provide your product to professional investors, let's say, to begin with. And that's very, very difficult. So because I'm based out of Hong Kong and the regulators, I can see they're, because they want to attract more talents to Hong Kong, they have a really good talents program, by the way, if anyone's interested relocating to Hong Kong. And the government has been providing a lot of subsidy and things like that. But to be honest, it's going to be not as fast as people would expect. There are some, Hong Kong dollar stablecoin flagship project that they are discussing, but I don't know when it's going to in a place that people can actually start using Hong Kong dollar stablecoin as the US dollar stablecoin. And on the US side, we were once applying for the money transmitter license, but that was also before FTX. And recently, of course, very recently, yesterday, we know that their SEC and then the regulators in the US is going to hold crypto gatherings, and we're very, very excited the outcome of it, and also the clarification that they're giving to securities, because in futures, to be very, very honest, we didn't know as a DeFi protocol how to navigate the regulatory framework in US before. So we had to block the US IP as a last resort measure. A lot of the DeFi protocols are doing the same. So now we're very happy to see the wealth notice being dropped against Uniswap. And yeah, very hopeful in general. Yeah.
Yeah, on the opposite Coinbase doesn't have to block US IP. So what do you think about the regulations here and globally?
I think centralized exchanges have their own challenges in terms of regulations. If you look at why do countries come up with these regulations, is because that any of the centralized exchanges, if they were to ever go belly up, they want to make sure that the citizens' funds are safe and secure, and they do not have to go through this multiple hops to get their funds. Different countries have thought this differently. Canada has come up with a regulation saying that 80% of their country's citizen assets have to be completely segregated from any other assets that are being maintained by the centralized exchange, for example, US or any other countries like Singapore. And then MiCA, which is Europe, wants to do 100% segregation. The challenges here is that when you have $10 in multiple bank accounts, you have to move these funds between these different bank accounts to be able to move $100 in one transaction. The more segregated these funds are, the harder it is for the centralized exchanges to be able to serve the withdrawals in a much faster capacity. There are a couple of patterns generally in this regulatory world. You can think of it as Lego blocks that you can build and start. For example, one of them is segregation. It could be a configurable factor of 80% or 100%, depending on what the country is. And Singapore hasn't come up with one yet. And then you have gas prices, gas fees to be paid for those transactions. Where does that come from? At the same time, how are you reporting these transactions? How are you reporting this ownership of assets on a certain cadence? At any point of time, you won't be able to say that you're 80% or 100% fully segregated, because if I say that right now any central exchange is 80% segregating the Canada's assets, then someone from Canada would send it to a customer in US, and they're completely out of compliance. So you have to look at it in a larger period of time, over 4 hours or 8 hours, or some cadence that makes more sense. And then you have to report these at a regular cadence. At the same time, you have to also deal with the AML, anti-money laundering practices and everything. Make sure the countries have been informed when something like that happens. Work with the regulators to make sure that it doesn't happen more often.
Yeah, thank you for sharing all the insights. And we're not going to end the panel without talking about the future, right? So what's your future? What do you think about the future of liquidity on both centralized way and decentralized way? Because we're seeing a lot of transactions happening more on-chain right now. And yeah, do you want to share first, Wenny?
Sure. So we started building Sim Futures because we really understand and we really believe the notion of open finance. And over the years, we really see how the communities in where their countries, central financial system does not really work as they expected, or they don't really have a performant financial system, benefit from DeFi. And users from Argentina, from Brazil, from Turkey, on a daily basis, they just convert whatever they gain from their local job and into USDT or USDC into stable coins and participate on chain. And for us, it's really just onboarding the next, I'm not going to say next billion, but for us, for DeFi protocol, if we can help onboard the next 100 million users on chain and make them understand how does the liquidity works, the yield works, and so that nobody ever has to be scammed, robbed, or their assets doesn't have to be working in a black box. So we're very excited for that.
I actually think that one doesn't replace the other. There's going to be both coexisting in the future. I believe it used to start with the centralized exchanges, and then now a lot of things are on-chain, considering the transactions are a lot more cheaper. And then the next couple of years is going to be a lot more DeFi, and then eventually there'll be some kind of a consensus between a DeFi and a central CeFi, and they'll both coexist together. we will be looking at the smart contracts and a lot of tokens being supported in terms of a DeFi, and then we'll be looking at the central exchanges for the deep liquidity and to be able to custody these assets for the longer term.
Yeah, thank you for sharing, and thank you for joining the panel today, Wenny and Raajeev. A round of applause for them.
Thank you very much.
Thank you.
Thanks Shuki.
Thank you.